All right, let's get this all set up. Greetings, everybody, and happy President's Weekend. Hope everybody enjoys their extra long weekend. I know I will, especially since I get this done on Sunday afternoon, and I'm free until Tuesday. This is my top-down review. This is Jeffrey Scott, and I entitle it for today, which is the weekend of February 15th, 2015, to new highs and beyond. Sort of a takeoff on the old Toy Story, to infinity and beyond. Disclaimer, this is for education purposes only. I'm a doctor, not a broker, and I am independent. Although I use a lot of different programs, I paid for all of them, and I'm not being paid to say positive or negative things by anybody. Trading involves risk, and you alone are solely responsible for any investment decisions that you make. I entitle most of my educational programs, the live events especially, the Be Your Own Guru, where I hope you take your time and make your investments in appropriate education, reading materials, and software tools to help you become your guru and rely upon yourself and no one else, because I can assure you that except perhaps for your spouse, no one cares more about your money than you do. My influencers are here, whether it's starting with canceling with William O'Neill back when I started trading in the early 90s, to Ian Woodward and Ron Brown, who really took canceling to the next level, automated it with HGSI software, Morales and Katcher, ex-O'Neill money managers, who added things such as Bible gap-ups and pocket pivots, Punch Bowl of Death, coming out in April will there be their new book on short selling. Alexander Elder, a number of books of which Trading for a Living has been updated with Kerry Lavorne, his partner. Great books, not just on psychology of trading, but money management, and introduces us to things such as the impulse indicators and force index. My friend John Person here down South Florida, author, teacher, trader, good friend of mine. What I like about John is he's got the same setups and triggers that he's had for 25 years that he uses today. And when something works for that long, it's likely, I believe, to keep working. Anna Cooling, probably the easiest approach to volume price analysis. The book's less than $5 on Kindle. Van Tharp, the guru of money management. Thomas Dorsey, not about necessarily just about point and figure charting, but how he looks at, his firm looks at comparative relative strength. And then my partner for my meeting, George Lee, a great trader from Canada, despite being from Canada. What I need in my desert isle besides high-speed internet, TradeStation, Thinkorswim, Genesis Trade Navigator. I use for most of my analysis HGSI and EdgeRater. I'm a big seasonality believer, and I like Magenta Trader, which unfortunately, because of issues that I don't fully understand, nor would I comment on if I did, Magenta Trader is now a basic website program as they rebuild the product. There's a new there's a company called seasonaltrader.com, which is basically the old Magenta Trader, and I'll comment about that later. Best Choice Software, another approach to seasonality, probably the predecessor. And then from a website perspective, you see them listed there. I always put this up here. I want to know where I am. And frankly, if you had to ask me where I am right now, I think we're on another leg up. So are we back in the green circle, but we're up here going on to new highs? I think so. I mean, that's what it feels like. A lot can happen before Tuesday. More to comment about that. But I am certainly more bullish this week, or I was the last few days, than I've been in some time. Now, why do I even look at this chart? Why do I care about this chart? Why do I care we are in where we might be at a given time in the market? I care because it tells me what to do. If I am truly bullish, that means I'm going to be buying stocks, buying calls, selling puts, doing covered calls, and bull put spreads. Now, I'm not a huge fan of covered calls in a bull market because I hate getting my stock called away, but that's because I'm not for income generation. You can get some better premiums perhaps as this market starts to go up, and if you're just about getting the return and having cash flow, then covered calls work great. Since I'm still more speculative in building my nest egg, I'm less likely in a very bullish market to be doing covered calls, hence they're in yellow. If I believe we're in a bearish market or in the downtrend on this slope, then I'm looking at bear call spreads, buying puts, selling calls, shorting stock, and contra ETFs. So if I'm believing we're taking another leg up and we're in a new green buy circle, then I'm concentrating on the 4 things in white on the left as my strategies. Now, I thought I'd take a little bit back in time to what life used to be like. If you look at from this beginning of this bull market in 2009 until at least through the end of 2013, we had periods of pullbacks and slowdowns, but for the most part, growth was in vogue, or as a well-known TV personality would say, en fuego. Now, this would be typical. This is what we saw in 2013. Now, because the number of entities are very low on
call from Ocean.
At the extremes, you can see less than 10 stocks here and over here. I usually start with about the 20 here and end either between the 270 and the 280. And I do that because it doesn't do me any good to analyze where there's one stock making the move. And on a typical year, one would expect something like we would see here from the lower left up to the upper right. And as you can see, 2013, if you remember, was a wonderful year, and even the lower ERG stocks generating a 20% return and as much as a 50% return on the higher ERG stocks. EPS rank mattered. High earning per share stocks did better. High relative strength stocks did better. Group rank over a year I don't pay much attention to. Those stocks that went into 2013 accumulating led the year, and box stocks across the board beat box zero or no boxes. What does this tell me? This is a traditional growth-oriented year, and where relative strength, earnings per share rank, and accumulation distribution, not at the end of the year, but at the beginning of the year, led to better gains. Then we got to 2014. Now watch this curve. Well, curve kind of looks similar, but it's very flat. And if we keep up with the same convention, about from -10 to +8. So much more contracted year. But what's interesting is there's really no consistency of earnings per share rank, relative strength rank, and interestingly, those stocks that entered 2014 distributing actually had the best performance for the year. So I find this year to be very confusing in 2014, and I'm on a number of different boards, and it's pretty clear that whether you were a canceling investor, a growth stock investor, you probably, as the caption says on the bottom, got chewed up. One would expect, as we saw here, that the higher AD letter rank had better returns. That's not what we saw. And boxes were irrelevant in 2014. Well, let's look at 2015, and let's look at the last 2 weeks. On the left, and this is the craziest week, we had the week going up to my meeting from February 2nd to the 6th. And I ran this, I showed it at the meeting, and Chris White actually, I think, was shocked by it, and he checked it. So using the fundamentals on the prior Sunday, you could see that the worse ERG, the better performance you had on the week between 2.2 and 2.6. EPS rank didn't matter, and the lower relative strength did better, and the distributing stocks outperformed the accumulation stock. And the worse your group rank, the better. So if you scratch your head, I think there's a simple answer. Yes, there was new leadership and junk off the bottom, but I think what happened was the big movements all came in oil stocks and energy stocks, which were the bottom feeders as the week started. Now, contrast that with the last week. Here you have a movement between 1% and 4% in 5 days. You multiply that by 52 weeks, and you got a pretty dramatic movement. Obviously, we won't get this the rest of the year. Interestingly, EPS rank mattered, and we're starting to see an improvement based upon relative strength rank and no more underperformance for those that were accumulating. So is this back to 2013, and are we going to see more normalcy return? Was this just a great week for growth stocks? I don't know, but I sure like the pattern on the right better than the pattern on the left. And obviously, for those who don't know me, these are being done with EdgeRater. So market thoughts. Energy leads a broad-based rally. Positive news trumps some questionable economic reports. It was interesting. It seemed like on the employment numbers and a lot of the other things, we missed a bit to the soft side. Truce in Ukraine, if that holds, started today. That could be positive. And, whenever some positive news came out between the relationship of Greece and the EU, you saw improvement in the market. So it'll be interesting to see if that continues. Growth outperformed, felt like 2013. Now you know why I put this in here. Multiple big breakouts on earnings. God, think of cyber on Friday. Wow, I'm so glad I own that stock. And lots of stuff working or about to work. Technology, especially structural software and semis. Select retail. Take a look at Burlington, among others. I think Marine Max. Steel stirring. Selected healthcare names. Maybe not Gilead, and maybe not Celgene or Alexion or Biogen, but how about distributors? How about Rite Aid? How about Catamaran? How about medical devices? Grocers. Look at Kroger. You want an LLUR? Look at Kroger and look at several others of the grocery stocks. Airlines setting up at support. They've all pulled back sharply related to the oil going up, perhaps to the blizzards, perhaps to some bad news by Hawaiian Airlines. But look where they're sitting. They're sitting on support, and many of them had dojis, suggesting that they're ready to bounce. I have a big position in Lennar, and I have to admit it wasn't top of my mind this week. Then I looked at it this weekend and seeing that it's setting up, I don't know if it's necessarily new highs, but recent highs. And looking at it on a long-term chart, it is getting up towards new highs, at least bull market highs. Energy off the bottom, and I used to know how to spell. Defense not working. REITs, utilities, tobacco and beverage. I'm not sure I would say they're not working, except to say they're no longer leading. That's good, because in a bull market, the last thing I want to see is that things being led by tobacco, beverages, and other things that might be defensive. Know your news and EPS dates. Let's take a quick look on the news. We got housing, mortgage, building permits, PPI, minutes on the 18th. That might be important. Initial claims on the 19th, continuing claims on the 19th. Philly Fed, we've got some energy inventories. Most importantly, even though it's a short week in the market with Monday being closed, and I think a lot of those Monday earnings might be pushed to Tuesday, a very, very busy week of earnings. Speaking of earnings in Tuesday, I just wanted to put out here that I'll be doing a live webinar in the market on Tuesday. If you don't get a specific invite, it's tinyurl.com/HGSI-doc/-2-17-2015 to register, and I'll be doing probably an hour and a half talking about my new add-ons, my new smart groups, and a little bit about what I think what's going on in the market. And since it's live, I'll be able to answer questions. So on that note, let me just go back to the slide I skipped and make a comment. First, I have no ownership stake in any software companies as we speak. That's not to say that the future might not change. But what I really want to talk about is sort of what's going on with the seasonality programs. I am not taking sides here. All I want is to have access to a good seasonality program. Magenta Trader has been my go-to, and Magenta Trader came up with this awesome calendar function where it lists the great stocks for the month for you, does much of the work for you. Now, Magenta Trader is now called Seasonality Trader. And Seasonality Trader, I guess you could see it down in the bottom. And I'm going to switch out of this view because I think it's easier to see it here. Seasonalitytrader.com. And here is the proprietor, Eric at erichey.com. And if you reach out to him, especially if you're a past Magenta owner, he will talk to you about some donations he's accepting to sort of help us maintain access to Magenta Trader while the other proprietor gets his website version up to snuff. And, I win if that program turns out to be better than the old one. But until we know that for sure, I'm going to keep my day job. And by that, I mean keep using the original version. Now, I must be having some internet difficulties because I'm not updating well on my trade station. But let me just go in very quickly and look at my elder indicators before I look at some other indicators of what's going on in the market. And frankly, this is going to be a quick look because here's my NASDAQ. This was my top, and you could see it on Thursday and Friday. We blew right through it, and you can see that little red dot there is some MACD divergence, which I also had seen some on the weekly that abated. We are in a buy signal with this blue dot from person. Green from the elder indicator means you're allowed to buy, go long, or be holding. You should not be going short. So we have a big breakout on the NASDAQ, also on the weekly in green, and on the monthly. On the Dow Jones Industrials, let's see if we update. Yep. Green, green, and green. No evidence of divergence. Breaking towards new highs, not to new highs yet. On the Russell, or Russell futures in this case, we've got some evidence of MACD divergences here, but we're all green and we're on a buy signal from person indicators. On the S&P 500, we got some MACD divergence concerns popping in on the daily, but we are green across the board. So NASDAQ 100 NQs, MACD divergences at the top of the channel, but all green. And the S&P 100 futures, OEX futures, green, 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 and on the S&P. So what do I get out of this? I get out of this that we're starting to get extended, that the MACD divergences usually pop up for several weeks, demonstrating perhaps not a necessarily lack of conviction, but less participation, and that could be an early sign that this thing will slow down. But right now, boy, one has to be pretty excited about the possibilities of this market. All right, let me move this over. I had a lot of fun in my meeting showing people how I use my radar screen during the day. And George and I sort of played our own little fake CNBC where we were talking about different stocks breaking out at different times. And I'll tell you, it was a great time. Really appreciate George coming down to help me out, and had a great time with the attendees. And going out on the boat Tuesday wasn't too bad either. I do like to look at some of the things I get out of EdgeRadar as well, or sometimes from HGSI. And when I say one or the other, I use both of them, and I don't favor one versus the other. To me, they are complementary, and frankly, I need both of them. I can't rely on one or the other. I can't reach my goal and maximize my review without access to both. So just a couple of the market timing things that I look at. I look at the Hindenburg. We don't want to see this signal. Hindies occur near tops, and we're nowhere close, so perfect on that. Bucketology, we're at 77. Last week on Friday, I think we were at 71. And one of Ian's rules is once you get above 70 in a strong market, you may have 10 to 15 more days of up. And we are now 5 days down the road, and that was a very nice week for me, and I'm sure it was for you if you're long. Still looking good, and without too far to the right, meaning we don't have the preponderance of stocks above the upper Bollinger Band. On my market indicator, you can see everything is nice and green. We saw the kahunas come in here, switch us from chop to green, and hopefully we keep on going. I have a number of different setup programs that I look at trying to find out what's working in the market, and I do this to help automate some of my analysis. Let me shut this down. On a seasonality note, I did want to look at point one thing out, and that is there are a lot of stocks that have great seasonality at this time of year. And you could see up at the top are a bunch of stocks that have, over the next month, have 11 out of 12 positive. Now, I don't know much about Men's Warehouse because they don't sell clothes long enough and thick enough to fit me. But 11 out of 12 years up with 10% average return might be something to look at. And here's buy percent return. All right, so I've now formed my opinion that this appears to be a market with some strength. Now I'm going to jump into HGSI. And I'm going to go into major market groups, Woodward and Brown, major markets plus. I'm going to go to the T1 view, which is all price and volume, heavily weighted to the most recent period. And lo and behold, when's the last time we saw the NASDAQ and the S small caps up top? And volatility in utilities and bonds and dollars, gold at the bottom. Clearly was a great week for growth stocks as the small, the mid caps, and the NASDAQ led. If we look at 5-day performance, you could see almost 5% on the semis, NASDAQ 100, 3.7. Interesting, silver up 3.2 while gold was down a little bit. If we look at 1-day performance, you could see silver, oil, commodities actually led on Friday, and we did see a little bit, not weakness, but less movement in some of the major indices. Very quickly, let's take a look at the stocks, the major markets, rather. So I'm going to go into my busy view, my web view, which I've reviewed this in the past, so I'm going to go quick today because I'm going to be doing this live again in 2 days, or one market day. And the first thing I look at is no phoenixes or eurekas, so let's go into a simple moving average view. And this is my 8-day exponential with my 17, 50, and 200. Now, a couple weeks ago, I put this trend line in here a week ago, and I said I'd like to see us break above this and retest. And look how beautiful this was. We broke above the 8-day, retested here, and this is the S&P 500. And frankly, we have taken out past highs, past recent highs, and intermediate term highs, because here's the high. And whoops, and I can't write, can I? And now I guess it's onward and greater things. So breaking out to new highs in the S&P, 8 and 17 through the 50, all of them uptrending. Very bullish looking as far as I'm concerned. I mean, obviously it just takes some bad news to change my mind. But right now the S&P 500 looks good. If I look quickly at some of the others, NASDAQ, similar, broke through its resistance, breaking out to multi-year highs. I look at the Russell breaking out through a triple top, 1, 2, and 3, and to new highs. Now, how bullish is this? I mean, all it takes is 1 day to turn around, but it has not looked this good in quite some time. Then we'll just lastly take a look at the Dow. Probably the laggard here, not yet at new highs. Let's look at the dollar. Dollar traded down a little bit this week. So the doji on Friday. We'll see which way the dollar moves this week. It's at multi-year highs, or very close to multi-year highs. Volatility came down to the 200-day moving average. And then, despite the fact that the dollar came off some, you know, gold continues in a bit of a funk. And I know it's right in front of me, so let's look at the gold spiders. And, you know, until I get above that 200 and start to and stay like I thought we were going to do back here, I'm not very bullish on gold. Silver had a better week, but frankly, look at the gold chart. And now look at the silver chart. Silver is also below the 50 here. Now, it's at an interesting point where it closed right on the 50. So if silver starts to move up here, I might be a little bit interested in trying to play this bounce up to the 200-day moving average. After I've looked at the major markets plus, I go down and I look at what's working now from a industry group rotation. Let's go into 07. Now I have 176 groups I care about very recent. Let's look at 2-day force. And you could see I've got 79 groups to the upside. Let's look at 2-day force down. I have 8. Here's your packaged foods, your REITs, your utilities, your beverages, your tobacco. We call those defensive stocks. If I broaden out for 5 days, I can see I have 10 to the downside, adding more utilities and automotives and power generation. And if I look at a 5-day on the upside, I've got 80 on a 5-day, and I've got 79 on a 2-day. So what does that tell me is that we're not dealing with a 1 or 2-day wonder, but we're actually, what we're seeing today has been the same over the last week or so, maybe even longer. Let's take a quick look. So I highlight, right-click, change index group, and let's take a look. Let's make sure we're going to rank by raw combo. Let's look at some of the leaders. These are the same leaders as we've seen for a while here. Halliburton and Schlumberger. Of course, I hit Schlumberger, but I'll back it up to Halliburton.
spell it, the German way, M-Y. Yeah.
Okay, here's Halliburton. You know,
I wanted you to set up the movie.
Halliburton, 2 minutes. Halliburton had a it pulled back hard with oil, gradual uptrend. Certainly it's in an uptrend with higher highs and higher lows, but a relatively flat uptrend, mostly green. They did announce layoffs. It didn't seem to hurt the stock. And it's not that surprising to me to see perhaps that the, how do I want to say this, that the commodities might be moving, the commodity companies like Halliburton and oil exploration might be moving up before the actual commodity does. We saw that with gold miners a while ago. Here's Halliburton. Schlumberger, a similar chart, perhaps a little bit bigger bounce with a kahuna on Friday. OBV turned up, all green. Baker Hughes has resistance at the 200. This one's under potential acquisition by Halliburton. Helmrich and Payne, pretty beat up. Looks like Schlumberger and Halliburton. Patterson, UTEN. It doesn't matter which one I look at. This one looks a little different. It's a little bit earlier in its recovery. Bottom line is, as I look at these stocks, what I see is a beaten up group that have flattened off, and that was group number 4, not group number 1. If I'm going to play there, and I am playing, I'm going to play with the leaders, which are Halliburton and Schlumberger. Exploration and production changed to the index group. Now, again, a lot of stocks with similar charts. I own Whiting, I own Fang, I own Matador. I've got a couple others, and I'm not sure how many of these I need to own. I've got great exposure, but it was sort of a great time to start nibbling at these off the bottom about a month ago. Here's back mid-December. This is Pioneer Natural Resources. Let's just put up a weekly chart for grins. And what you could see is big fall off down to the 200 weekly moving average and about a 20-25 point recovery or a 20% recovery. And this is pretty typical of what we're seeing. Probably still early on the recovery, although if oil prices were to take a big tumble from here, I wouldn't want to be in as many of these stocks as I'm in. But you see a similar pattern. Here's Whiting Petroleum off the bottom, Anadarko moving up off the bottom, ConocoPhillips off the bottom, Apache off the bottom, Hess off the bottom. I could go through a lot of these. They all got about the same basic pattern. The message here is these stocks got hammered on the fall in oil. Most of these companies are still in business, or all the ones I'm showing you, and their stock charts and prices seem to have bottomed, despite the fact that oil has remained somewhat more volatile. That's 2 oil energy groups. The next group on the list is infrastructure software, and I own 3 of the first 4, which is not necessarily a good thing, because if this market tanks in this sector, one might expect all of them to get hit. But basically, let's take a look at what we got, because these had some nice breakouts this week in this group. We'll start with FireEye. I bought FireEye maybe 2-3 weeks ago only because I looked at the stock, and this thing has just been basing. And when it broke up here, I may have bought this false breakout in early January. When it broke above its moving average confluence, I thought that something had changed and that we might see a change in the stock. And it failed the initial breakout. This would have been a good time to get in right where that pocket pivot. But FireEye is broken out. It's very beaten up. If you look at it on a weekly chart, you can see how far it's come down. And I don't think I'm going to ride this all the way back up to $90, but I've got stops in. I've had a nice run. And just to be checking on earnings, and remember that thanks to George, we now have earnings on this page. Earnings aren't out to May. The earnings are already out. So FireEye looks to be a nice little play right now. Big earnings gap up. We're talking even closing in the lower part of the day, a 15% move by CyberArk on Friday. in the same group. This is an Israeli software company, recent IPO. Microsoft, not nearly as attractive a chart. It sold off hard up here, trying to get back above 200. I would probably skip that one. And VDSI looks a lot like Microsoft, except it had a big gap up on Friday, probably in sympathy to CyberArk and FireEye, but its earnings are coming out Tuesday. Look at the volume. Look how OBV has turned up. Still red on the weekly. Had a Bible gap up on Friday as well. VDSI coming into earnings tomorrow, Monday or Tuesday. Akamai Technology, a lot of the video things that you see on the web, they are the drivers behind that, breaking out to multi-month, if not longer highs as well. So this is a very strong group, and I'd be looking only at the ones above the index. Why buy things that are lagging, although Palo Alto Networks is not lagging much. Internet-based services, I think some of this is moving because of a transaction. Orbitz Worldwide, I think they announced on Thursday, is being acquired by, I think TripAdvisor, I can't remember who's buying them, Expedia. But you can see the big gap up, so we don't play that one at this point. TripAdvisor had a nice up move in sympathy, a lot expensive stock, got some resistance at that 200 right above it. Here's Expedia, the acquirer. I might be interested in playing this one, although I don't like its earnings per share. Priceline.com, I guess earnings come out the 19th, which is Wednesday or so. Seasonality, a very strong period for Priceline. They've already started to move up. This might be something that I play. And let's see. I think I got... Very quickly, I'm going to start seasonality trader. Those that own Magenta are going to say, whoa, that's Magenta. And I can't say that for sure, except to say that the person who is offering it to Magenta owners and new owners used to be involved with Magenta before there was a split between the entity that marketed it and the entity that created the technology behind it. So let's look at Priceline here real quickly. So what I see here, the yellow is 10-year seasonality. So it's based upon the last 10 years predicting the change in price on a daily basis of the stock. Green is 5 years. Let's take a look at where we've been the last short period of time. So here's Priceline in a channel at the top of the channel. That I don't like. And this is where the seasonal hotspots are. So if I look here, if I buy it March 24th to May 4th, I'm looking at 11.7% average return on 9 out of 10 years. Now, we are already within the current green zone. So our 10-day, here's our 10-day average from here, not very much, 1.4%, 30-day 3.6%, 30-day on the 10-year suggests 7.2% move from here. I mean, the problem with Priceline is at the top of the challenge. I'm going to probably wait for it to come back in here, get to the bottom of the channel, and then I might consider doing something with it. So perhaps Priceline is not a begging to be bought now because it's already, frankly, had its move from 1,008 to 11. So you already had a 10% move, give or take, in Priceline. All right, anything else in this group? Zillow, below 200. Grubhub, nice move on Friday. Then we get to the index. Continuing down, the next one on the list. Let's look at diversified banks. Interesting to see these guys here, but all the big ones are up here. Let's look very quickly to see if any of them look better than others, at least from my perspective. Citibank has got to get through the 50. Don't like the earnings per share growth. It pays a dividend of 0.1%, and you can see its bongo weekly up here is red. I don't know this one. I guess it's either an Argentinian, Spanish. Where's it from? Don't know, but I don't like buying international banks. Well, I won't say that. I'm not. Let's keep going. Wells Fargo, probably the best of the bunch, breaking out, not quite at recent highs. Not much in the way of earnings per share growth, and Wells Fargo pays a dividend of 2.5%. JP Morgan, breaking above the 50. Tepid earnings per share growth, pays a dividend of 2.7%. And then the one I have a big holding of, which is Bank of America, long-term account, had a nice move, but it's stalling at the 50. So if I guess I had to pick one new to buy, I'd probably be looking at Wells Fargo. But this group is in the top 5. But I caution you, two things contribute to the force. One's price movement, and the other is average volume. And look at the 50-day average volume on these stocks. 96 million shares a day on Bank of America, 21 on Citi, and so on and so forth. Group number 6, communications equipment, which is Apple and Cisco. Apple had good earnings, great growth of iPhone 6s, and I own both sizes, and I actually like the big one more. So I gave my kid my regular one. And nice lower left, upper right, relatively tight chart. Everything is green, OBV leading price, multiple pocket pivots, good earnings per share growth, and a small dividend, 1.5%. What's not to like? Apple remains in bull mode. Cisco Systems surprised analysts with a big gap up after earnings came out on Thursday with a beat and a raise. Not a new name by any means, and a stock that, on a weekly chart, kind of cup and handle-ish and breakout, so that might be something to take a look at. Remember, earnings are out, and much of this move was based upon a nice earnings story. Next group down, Internet Media, number 7, and take a look at the first couple, since I own a couple of them. First one we're going to look at is Groupon. So, a number of people I listened to started talking favorably about Groupon early in the week, and you can see it had a big move on Friday with a kahuna and a Bible gap up, mobile breakup from a squeeze, everything turning green. Earnings are out 5.5, so they must have had their earnings come out in the past week. Let's see. More info from Web. Let's go down to FinViz and watch how to open up a chart. I'll go back to that, and it should be right on Groupon. And what's it say? Earnings beat. Cheap stock in a good area, certainly a leader. The other thing that was good about this was I think they went up because Grubhub, a competitor, got bought out. Twitter had a big earnings beat as well, big Bible gap up here, and it looks like it may want to go higher. I have a position in Twitter. Google might be under some pressure this week, as on the news today were a couple $1 billion of stocks can be sold by their founders, who still own an amazing amount of stocks. So perhaps if you read the whole article, which I eventually did, a couple $1 billion in sales when you still have 48 or whatever billion left isn't a big deal, but that could put some pressure on the stock this week. The other one to be concerned about is GoPro has a big lockup that ends this week as well, so there might be a lot of GoPro coming to the street. A lot of my friends, specifically one of my good friends here, John Person, have been relatively bearish on biotech, and been bearish on biotech probably for two reasons. One, seasonality, and he called it last year about this time, and biotech really got hammered. And the other reason is it's had such a run, and we'll look at the IBB in a second. The leader from a big company perspective is probably Gilead, SoftG. Great earnings per share growth, a leader in hepatitis C. But face it, even though I love it and I own it and I'm a bull, it's going sideways to down. And had its earnings come out, they were great earnings, and the stock sold off some because they talked about discounting. If I look at the next one on the group is Alexion. Also has pulled off its highs. Maybe trying to get back, but he might have some resistance under the 50. It's got some tough quarters coming ahead. Vertex, below the 50. Ariad gapped up on some news that they're getting rid of the CEO. I always laugh when I see positive news like that. I'd hate to be a CEO of a company whose stock gets no respect and the stock goes up just because they're firing me. I've seen that happen so many times. Amgen for a decade did nothing. They announced they were firing the CEO, 3-4 years ago, and the whole stock changed. But I look at this sector, and Trexon's a good one, breaking out a small stock with the doji. Everything is green, no earnings. And then here's BioMarin. Now, I'm going to show you one thing, and then I'm going to pause it. Here's IBB, and you could see on a weekly chart how much of a run IBB has had. And everything is green. John and I have a lot of discussions about this. Like I said, he was right last year. Here's a big sell-off that occurred in February and March. And we're talking a pretty big sell-off. And I was very long biotech, and I got hurt by this one. So perhaps I'm much more willing to listen to him this year. 24% drop in 7 weeks. And we've dropped from the highs to the close here a little bit, but not much, probably a little bit more than 13 to 15, or excuse me, a 4 to 5% drop in the last couple of weeks. So I'm aware of this. I respect his knowledge. He's been trading a long time. And I lightened up a lot of my small biotech positions and put some collars around my Celgene and my Gilead. I actually had the Gilead before earnings. So it'll be interesting to see. So although biotech looks pretty good, I guess the message is that not everybody's bullish. I'm going to put it on pause. I'll be back in 1 second. All right, I'm back, and we looked at internet media, we looked at biotech. Number 9, integrated oils. So again, the strength in energy should be apparent where we have exploration, we have services, and now we have integrated oils. Now, I'm not sure that I'd have any interest, to be honest, in purchasing Petrobras with the fraud charges that are going on there and how this thing has been beaten up. That said, I do remember a time a decade ago when there were a number of things in the press about how Petrobras has one of the best finds of deep oil and the biggest reserves. And should we get to a point in time, perhaps, where oil goes up and they get out from under their problems, you can buy Petrobras for a song here. In fact, if you look at a weekly chart, actually let's go to a monthly chart. It's been a decline for so long. You can see that this once was a $75 to $78 stock going back in 2008, and you can buy it now for $6. So I'm concerned about any time when there's the word fraud involved, especially when fraud potentially involves the head of state. And you probably are aware that a leading prosecutor was recently murdered. I guess that was in Argentina, so let me back up. That was the Argentinian processor investigating that head of state. But there are folks in the government of Brazil that are being investigated in regards to Petrobras and fraud and kickbacks. At some point, this thing is bouncing off the bottom for 6 weeks. At some point, this is going to be a buy. ExxonMobil, some talk about potential merging or buying BP, moved up off the 50, might run up to the 200. We got Chevron, and the thing about these similar pattern is these guys, unlike a lot of the E&Ps, actually pay a dividend. 3.8 on Chevron, Exxon 3.0, Petrobras a dividend yield of 10, but that doesn't help you if the stock price drops 50%. This is Petrobras of Argentina A. I wonder if the regular Petrobras pays a dividend. Let's see. Yeah, none on the regular Petrobras. So integrated oils make our list of the top 10. So you look at energy, and what you see are 3 energy groups in the top 10. And then lastly in the top 10, application software. King Digital had a great day on Friday, or up 13%, up 23% for the week. Kind of cyber numbers on a big earnings beat with a Bible gap up. Anything else here that looks interesting? Salesforce.com, I believe its earnings also came out. Let's see. Nope, earnings are coming next week. starting to get some earnings per share growth after being negative earnings for some time. Big move this week, pocket pivots, OBV turned up some kahunas. Adobe breaking out as well, not quite to all-time, to recent highs, but raising OBV, kahunas, pocket pivots, everything's green above, good earnings per share growth. This is one that I didn't pay attention to on my review this week, but this might be one I might want to take a look at as well. So there's your top 10 groups. Workaday looked interesting as well, looking down here on the list. Cerner also looking pretty good. So that's the top 10 groups to the upside. With the strength of this market, I'm probably not interested in shorting. Let's give you an idea of what's going on where it's not all wine and roses. The REITs, like the oil stocks, they all look the same too. And when I say that, I don't mean that as a compliment. And you can see the REITs sold off hard on Monday and continued down the rest of the week. This is Taubman. Here's Digital Reality Trust. Here's Prologis. Here's Iron Mountain. So you're seeing a lot of big pullbacks. Now they might be at places they want to bounce. If I look at TLT, you can see that the bonds also sold off and look just like the REITs. I don't lose sight of the fact that when we get to a point in time that interest rates actually start to go up, that instruments like this that are trading at their all-time high for bonds probably have a correction or two. But we'll wait and see if and when rates start to go up. So I've identified on my top down a number of stocks I like. I also like to spruce it up with a couple of my favorite scans. So I usually go up to all securities. And the things that I like to look at, I like to look at volume movers. So I go into my 5X volume. Let's just very quickly look at the top 5 or 6 here. Okay, where's my chart? Come on. Shut down my trade station. That's using up a lot of my juice. Exit anyway. Yes to all. Okay. So these are some of the big movers in volume. Take a look at some recent big movers and tell me if you didn't see volume go up before the stock took up. Iridium Communications, a telecom, I believe a satellite player, a small amount of earnings, kind of flat. Big volume came in on Friday, 8.5 million shares, which is 10 times normal, broke above the 50. Earnings are coming out next week. Iridium pays no dividend. Genetic Technologies is a company that's in the genetic testing, which is a hot area right now. They got a good ticker, GENE, which isn't the reason to buy a stock. And you could see on this weekly, it's been in a gradual decline for years. And a couple of weeks ago, they started having volume coming in. This is a weekly chart. And you could see the weekly volume of 76 million, 48 million, 49, and then you get to 400,000, 200,000, and so on and so forth. And what happened here, what I noticed was it started getting noticed when they announced that they're working with some major pharma and biotechs in identifying tests to pair up with new drugs. And that's really the future of oncology and other diseases. Treatment is finding targets and then creating tests to identify those targets and drugs to treat the targets. So it's had a big run, kind of a close mostly down its big bar on Friday on huge volume. OBV is leading. This is something to take a look at. I'd like to see it quiet down. I gave this to my group on Monday. Hopefully some of the people at our meeting decided to follow my recommendation and my lead and bought into it. And this would have been Monday down here, breaking above the 200-day moving average after a retest. Columbia Sportswear, viable gap up on massive volume with kahunas the last 2 days. off of a high base. Be interesting to see what's going on there, or a base. I'm not sure it's a high base. CyberArk we already looked at. King Digital we already looked at. Ellie Mae's a mortgage originator in the finance group. Had a Bible gap up, closed near the bottom of the gap. I'm probably not interested in this one or its group. So I'll look at big volume. I might look back at my stocks that look like they're about to have a PSA reversal close at a squeeze. And we'll look at a couple of these. And again, these are stocks that should be basing or have slowed down their ascent because they're in a squeeze. And they're right underneath the PSAR dot and potentially could break out. And that would be a trigger, a buy for me. Here's Mylan, a generic drug. If you don't think generics are strong, think LCI, think Activist, think Acorn. This has been think Horizon. This has been a very powerful group of late. So this is one that's in a pretty substantial pullback since December. Breaking above the 50, a break above this PSAR dot might stimulate interest in a buy. It has a growth rate twice its multiple. I like Mylan a lot. Kinder Morgan, basing here in a squeeze, mostly green up above, pocket pivots and kahunas, right below its PSAR reversal. Toyota, probably not. Fortune Brands, right below the dot. Now, why do I pick this? Simple, because this is the working man's setup. Because the working man could say, all right, if this stock trades above the dot on Monday, I want to put a buy stop. And then I'm going to be able to set my stop right underneath the 50. And I've identified a stock at support, breaking out before it breaks out with predefined stops involved. And this could go out and take out new highs. Very strong group strength. This is Fortune Brands. Cynosure also looks quite good, lower left, upper right. This is a med tech play. So I'll go through a number of different scans, and just to give you a tease, because I'm not sure they're on the board yet, under Smart Groups, under Jeffrey Scott, you'll notice a new date, and you'll notice that I've updated. And not only have I updated, I give you my 3x volume. Let me go into my warehouse view for this. All securities. So we now have got in my Smart Groups. So one more time. So go into Smart Groups. Look up me up. And you can see we got my 3x and 5x volumes, my breakdowns from squeeze and breakouts, my pullback to the 50, which is my pullbacks to free parking with momentum, and my potential PSA reversals to the upside and downside are now all included in Smart Groups. What that means is that every day these are done for you. These are potential to the downside. This is a list to the upside. We just looked at this list here. These are stocks that have pulled back to the 50, so I'll show you what they might look like. And you see Mylan's on this list as well. So these are stocks that are in an uptrend, higher highs, higher lows, that then pull back and are now within 1 or 2% of the 50-day moving average with a kahuna. The one above it was Stryker, up there sideways. These are the kinds of stocks I like to buy because they're right off of support. Stryker looks good as well, mobile breakout from the squeeze. The last couple of weeks I've looked at my buy list very quickly, so let's do the same thing. I got a lot on my list. There were a lot of stocks. Now, there's not a lot of energy stocks on my list because I've got a full allotment, and frankly, I saw things that looked even better. So I'm going to go into chart mode, and I'm going to go, as Ian says, flicky, flicky time. Let's go look at one at a time and then say goodbye. VDSI, we already looked at it. Agios Pharma, small stock, market cap of about $4 billion, big uptrend, pullback to the 50. I'm just looking for some momentum. So if I see a kahuna on this stock or a pocket pivot or a Bible gap up on Monday, Tuesday, I might be interested. Earnings are coming out, but this is a stock that loses money, so earnings are not that important to me. Rackspace, old name, medium name, in an uptrend, breaking out, all green, had pocket pivots on Friday. Activist, this has been a favorite for years. Lower left, upper right, generics. Acquisition player, about to acquire Allergan. HCI worldwide. You know, I look at this chart and there's not a whole lot I like, and I wondered why I put it. What I put it on for was sort of getting close to new highs here. I don't know why it's here. Everything's green. There must have been a reason I liked it. I'm going to punt. I can't remember why. Solar winds, pull back to the 50, waiting for momentum. Did have a mobile breakout from a squeeze. Good buy point. Mallinckrodt, lower left, upper right. They bought Questcor. They keep on going. FireEye, we looked at them already. Bita Autos. I don't know if I want to buy this, short it. So right now I'm going to do nothing. But if this stock can get above that 50 and even better retest after getting above the 50, this might be an interesting thing to start playing with. A Chinese auto internet play. Eagle Materials, if construction and housing are improving, they will need cement. Great earnings per share growth above the multiple, off the bottom. Risky below the 200. Look at the group strength. Centene, I've been talking about this one for probably 2 years. Medicare, Medicaid payer, services provider, insurance company. Lower left, upper right had good earnings, continues to be a star. I have holdings. Endurance International, kind of loose, but lower left, upper right, everything is green. Kahuna on Friday, pocket pivots on Thursday, breaking out. Great earnings per share growth. Mercury Computer Systems in a big bull move here, getting extended, but great earnings per share growth. Michael Kors, a retail name, a quality retail name in a downtrend, poked its head above the 50. A little bit of momentum would be good. It's got earnings. I'd like to see it run up to its 200-day moving average, and I might play that if I see some momentum coming in. Splunk, this is one that I believe has been beaten down over the last year or so. This is April 2014 on a weekly, and it looks like maybe it's getting some legs underneath it. Same group as VDSI and others, potentially breaking out here. Great group strength. Avago Technologies and the semiconductors, lower left, upper right, big leader. Not much to say except look at those earnings. Acorn, big leader in the pharma biotech space, and you could see great earnings per share growth, lower left, upper right. WageWorks, another one of these stocks that had huge run-ups and pull back. Running again. Waiting for PSI reversal, had mobile breakout, Bible gap up, and pocket pivots on Friday. On the weekly, and on the daily, add a kahuna to that. So it really looks like it's got momentum coming in, not much in the way of earnings per share growth. Does make some money. AMC Networks, if you think about Star Wars coming, I don't know about you, but I'm going. I might even be in line when it opens up. I'll have to drag my wife. She hates Star Wars, but most of the people my age, we love Star Wars. AMC Networks, nice uptrend. Breaking out here. I'd like to see some momentum indicators, but I like the earnings per share growth. Do they pay a dividend? No dividend. Icon, this is one of the outsourcers for pharma and biotech. They do a lot of the clinical research work for manufacturers, lower left, upper right. Looks like it wants to run, kind of a pullback, a cup, handle, breakout. BRLI, similar space, nice earnings, got beat up, looks like it wants to run. So by the way, this is my buy watch list. This goes into my radar screen, and I will be playing these names plus anything else that pops up on the day the market opens, and I will add to that other stocks with movement. Here is ODFL. The truckers have sold off. This one's regained its 50. It's turning green up above. It makes money, and it's a leader in the group, no dividend. Martin Transport, another trucker. This one perhaps looks a little bit better, breaking about above recent tops here. All green above. Again, makes money. Probably doesn't pay a dividend, but let's look and see. Dividend of 0.4%. Here is Zebra Technologies. They used to make barcoding barcoding, and other similar type things for identification and technology. Beautiful move off of its October lows. Breaking out here, everything is green, makes money. RPC, I believe they make some of the metals related to the tubing for oil. Now, obviously, this is a group that's beaten up because of the destruction of oil, but as exploration and stocks go up and services stocks go up, it probably pulls things like RES up with it. 3.1% dividend. Bottom heading up might be a lower risk play in energy. Valero, another of the integrated, this has got marketing, so it's got service stations, it's a refiner, a big up move, big earnings per share turnaround in place, pays a 2.7% dividend. To me, it's very much like Mobil, Exxon. SMCI, lower left, upper right, same group as Mercury, nice earnings per share growth. This has been a leader for some time. Belden makes a lot of the cheap peripheral add-ons for computer equipment and other technology. Nice uptrend after being pulled back in October, breaking out to new highs. Everything is a green above. This is Skyworks, lower left, upper right, tight, leader. Now, I hate to put this on a list of potential buys, but Lakeland is one of those Ebola plays that was around before Ebola that had the same pattern as Alpha Tech Pro, same pattern before that, a plug earlier in the year, big run up and comes back, sort of my little up and down curve in the flesh. It's moving again, got above the 50, mostly green, had a kahuna. It actually makes money, has some pretty good earnings per share growth coming in, so it might be on the merits of the company, not the merits of Ebola story. APT also making a similar move. I thought Ebola was lessening. Here's that Genetic Technologies, which I told people about on Monday at my meeting, paid for the meeting. If you bought it, and at the meeting, George made a call on Line Energy on Monday morning, which also paid for the meeting if you bought it and sold it when he told you to. Nice breakout to new highs, recent highs, all green on Genetic Technologies, massive volume. Marine Max, don't know anything about this, is a retail store with actually good earnings per share growth. Broke out here, pulled back some. Group strength is good. If this thing gets a little bit momentum coming into it, I might be interested in playing it. Skeechers, shoe store, shoes and apparel. Great earnings per share growth. Continue. Looks like it wants to break out again. I'll be watching that. No dividend. Steel is stirring. This is one of them. This is MT, ArcelorMittal. And this is a similar pattern as oil. Bounced off the bottom. Retook the 50, lots of kahunas coming in, turning green above. Do this have a dividend? A 1.5% dividend. Similar pattern, AK Steel and others. FedEx, I love the uptrend, pull back to the 50, turning green and getting momentum. I get some kahunas coming into this stock. I might be interested in some FedEx. Southwest Airlines, very indicative of the airline. Big run-ups. In fact, we go out to a weekly. You can see this is run-ups for some time. And then a pullback. You look at it here. Does that look any different than it did here? Than it did here? Than it did here? No. What happened after each of these? It went out to new highs. I think airlines are at interesting points here. Pullback, touched the 50, closed up on the day. This is Southwest. Here's United Continental on the 50, closed. Boise Cascade, I thought this was a paper company that went out, leveraged buyout, and then it came back, but I might be wrong. This is a consumer discretionary retail. And you can see on the weekly breaking out to new highs. OBV on weekly looks strong. Makes money, good earnings per share growth, trades at a multiple of 22 with the earnings per share growth in the hundreds. I like this one as another retail play. So Marine Max, Boise Cascade looked interesting. Here's another airline. This one, JetBlue, probably the leading of the charts of the airlines, has not had as deep a pullback as the others. And if they can get through this weather, maybe they're about ready to run again. Mentor Graphics, don't know much about them, but in a powerful uptrend right now. Catamaran, this is in the same category as Express Scripts and CVS from the pharmacy benefit management and specialty pharmacy. One of the few ways that we actually take cost out of healthcare. And the reason why I like this company is it's sort of been a dead duck now for a couple of years. I'll take a look at this on a weekly. Let's go to a monthly. And when they're making acquisitions, this is what happens. And then they stop making acquisitions because they had to digest a big one, and they become in downtrends. Well, they started making new acquisitions. So new acquisitions usually accretive for this company, breaking out over multi-week highs. This might be something to look at. Catamaran CTRX. Rite Aid is another one of the drugstores. They bought Envision, which is in the same category as Catamaran, a company with specialty pharmacy and benefit management. They gapped up, gone sideways. I've liked them for some time. Certainly smaller than the CVS or the Walgreens. Cynosure we looked at earlier as a med tech play, lower left, upper right from the October lows. Cardinal Health, one of the companies I sold businesses to, and a major stock holding of mine, very tight, lower left, upper right. I think it wants to run again. It actually makes money, decent earnings per share growth, pays a modest dividend that should be higher, hint, hint, at 1.6%. Apple we talked about before. Now, KBR, I start to get some interesting choices. This is in the engineering construction, obviously well below the 200-day moving average, and looks kind of ugly on the weekly as well, except it looks like it's bottomed. And I like getting in early on some of these. I look at it, it does make money with some earnings per share growth increasing. I've put in a double bottom here. I've put in higher highs and higher lows. I may have some resistance at that 200, so the lower risk is to wait for it to break through it and retest. But this might be something to consider nibbling. OBV is leading. Here's another airline pullback to the 50-day moving average, a great potential for bounce. Mosaic, I missed this one. I think I talked about it a few weeks ago. Broke out to the right side of the cup, broke out above the high of the left side. All green, lots of pocket pivots, OBV leading in the fertilizer play. AG, this is one of the marine shipping plays. A number of them made my list. I like this one the best. High base breaking out here after mobile breakout from a squeeze and a kahuna. It pays a 0.5% dividend. Good earnings per share growth. Here's another bottom play, a specialty chemical play. I think I liked it because the earnings per share growth, it's been beaten up, and OBV is turned up, group rank is turned up, but this would be one that you're playing knowledge that it's not a leading stock, pays a 5% dividend. That's the other reason why I liked it. And then talking about beaten up stocks and old names, GTLS is they make pumps and other things. They've been involved in the oil industry. They had a great, here's that pattern, up and down. Is this where it's bottoming? I don't know. It's kind of a round trip, though, from where it started. That's kind of interesting. But let's look at it on a daily chart, and I see a bottom in place. I see, just like a lot of the oil exploration stocks, a break above that PSAR dot. You might see a run back up to that 200-day moving average. It makes money. This was a long-term leader in a pretty severe downtrend. Look at the group strength. Ultra Petroleum, if I was to add an exploration stock to my arena, this is one that I'm interested in. It's broken above the 50. It's on a new uptrend after a bottoming like all the oil stocks. Now, it may have only been a short-term bottom. It may go down. Talk about retail. Here's Burlington. It's got some good earnings coming in. I still like it. RIG, this is another old name. Looks like the other oil services stocks. I'm not sure I'm going to play with this. This is one of the first ones that taught me the pain of a round trip. Here's your round trip. And you notice the ascent. In fact, let's just look at this with math, because this is a lesson that I wish I would have learned. From its start here to its peak, we have an increase of 295% in 40 periods. From its peak to its lowest point, I dropped 75% in 7 weeks. So you can give up much of your gains and return back to where you started in a very short period of time. Same thing happened here. Hit a bottom, and it ran up from the bottom to a top here. 16 periods, 16 weeks, 135%, and then in a matter of two weeks gave back up nearly 60% of the price. Be careful with this one. However, here's why I picked it and put it on my list of potential stocks to watch. Not I'm buying it, potential stocks to watch. Looks like all the oil exploration stocks is put in a bottom. 16% dividend. You know, can they maintain their dividend? Is that a dream? I don't know. I'd have to do that nasty word that we all need to do called research. But I think that's kind of interesting looking, especially that dividend. And that's it for the ones that I found. Again, these are watch lists. This is a list of stocks that I'm intrigued by. I find these after looking at 600 or 700 stocks and doing my top-down review, and I stick them on a list that I'm going to watch over the week. Certainly on Monday, and I'll add to them as the week goes on. Have a great week, great President's Day, and hopefully I'll see you live on Tuesday night. Look for an invite or